Thank you very much. Hello, our viewers, ladies and gentlemen, to all the students viewing us from across the country, wherever you are. I take this humble opportunity to welcome you here on this live show of KUTV to take you through Business Studies Form 4. Topic, financial statements. Subtopic, trading profit and loss account. My name is Humphrey Sasia from Odero Mixed Secondary School, ready for you here right away. I welcome you today for this lesson. Business Studies, Form 4. Want to look at financial statements. That's the topic. Subtopic, you want to look at trading profit and loss account. That's our area today. And just before the lesson, I want us to go through the specific objectives that by the end of today's lesson, the learner or whoever is viewing us today should be in a position to do the following. One, you should be in a position to define financial statements by giving specific examples. You should be in a position to calculate the gross profit and present them on the account, prepare a trading account and present the information there. 3, you should be in a position to calculate net profit and present it on a profit and loss account. So let us look at financial statements. So in every trading organization, a business enterprise, any other association that is carrying out a trading activity with the view of making profits, it must keep financial documents to know the worthiness of that particular organization or enterprise. So a financial document or a financial statement, for that reason, is a detailed document showing the financial worthiness of an organization in terms of an organization in terms of profit or loss. So the examples or the categories of these financial documents we want to look at today, there are 3. We will be looking at the trading account. We are going to look at profit and loss account, and then look at the balance sheet. Having mentioned the 3 documents that we are going to be looking at, I want us to start with the first one, the trading account. Now, in every business enterprise, as I've mentioned earlier, is that every enterprise or every organization works with the view of maximizing the profits. That is, the selling price to override or to supersede the buying price. So every organization that is engaging in trading activities will be working hard around the clock to realize or to maximize the profits. So in this case, you find out that there are losses made. It's not obvious that every financial year the organization or the enterprise is going to be making profits all along. There are ups and downs, and that's where we have a profit and loss account. So there are times they make profit, there are times they make losses. So let us go through a trading account and see how a profit, how gross profit is calculated, how the buying price can or how the operator can maximize or can raise, can set a particular price that will be higher than the buying price in order to arrive at a particular gross profit. So in this case, we are going to look at the trading account. One, before we present the information on the trading account, we will look at how gross profit is calculated. So gross profit. Now in this case, GP is equals to sales minus cost of sales. Now, this cost of sales, it's a business term that is referring to, it's an extended meaning of buying price, the cost of buying the goods for sale. That is why it is called cost of sales or cost of goods sold. The amount of money you spent on the goods that you want to sell or you have already sold is called cost of sales. So before we look at the gross profit here, we look at how do you get the cost of sales. How do you calculate the cost of sales? So in this case, cost of sales or cost of goods sold is equals to opening stock plus purchases minus closing stock. So the opening stock, in other words, it refers to the stock at the start. For example, every trading period begins on 1st of January and ends on the 31st of December every year. So the amount of stock you open with at the beginning of that day of the trading period, the first day of the trading period, it is called opening stock. Now in this case, if I can simplify it into simple terms so that we narrow down to that small scale retail trader down there. They have woken up in the morning with the stock in the shop. That retailer out there in the village, can you figure out that? So they have woken up in the morning with the stock in the shop. So he will do what we call the stock taking to know how much stock does he have. If for example, it's a greengrocer, how much stock do they have, does this lady have to sell from morning to evening? That's what we call opening stock. If he is going to find out that this stock is not going to be enough to trade for the whole day, is going to make more purchases to make this stock enough for trading the whole day. Now in this case, whereas he has got the opening stock, he is going to make more purchases. So purchases, this refers to the goods bought to add to the opening stock for the trading period to kick off. This is just where the trader has realized that the stock at hand they have opened the trading season with, or that trading day with, is not enough to make it to the whole day up to evening. Say for example, if this trader uses or makes sales of 100,000 daily, a stock of 100,000 daily goes down, and upon opening in the morning finds out that the stock in store amounts to maybe 50,000, 80,000, 60,000. It's less than 100, the normal average sales made in a day. Then he's going to make more purchases so that to make a steady supply of the stock to the customers, right? He's going to make more purchases so that he's not going to cut short the supply. The supply is not going to stop along the way in the name of he did not stock enough goods for sale. So on top of in addition to the opening stock at the start of that particular day or trading period, they are going to make more purchases, to purchase more goods in order to make the stock of the day to be sold to be enough to have a steady supply of the goods in the market or in that particular shop. So let us look at how do you find the cost of let us now look at the closing stock. After looking at the opening stock, we have looked at purchases. We are looking at the closing stock. Closing stock is also known as stock at the end. What is stock at the end? That is end of the period, end of the trading period. Now, in this case, the end of the trading period refers to the date when you close over the activities, trading activities of that particular season. For example, if you begin on the 1st of January and you end on the 31st of December, so that stock at 31st of December is what you call closing stock or stock at the end. To a greengrocer, the stock you close with, let's say for example, you open your greengrocer at 10 a.m., you close at 10 p.m. The stock amount of stock you close with at 10 p.m. is what we call stock at the end or closing stock, right? Hope you are together up to there. The stock at the end or closing stock. So this differentiate between stock at start or opening stock. And then we have stock at the end or closing stock. So we have got stock at the start or opening stock at the beginning of that particular trading season. Stock at the end or closing stock at the end of that particular trading season. I'm focusing on the greengrocer in the local villages there where the people we interact with in our day-to-day life. So that trader is the one we are going to use as a case study for our lesson today. So in this case, the stock at the end is the stock that is the greens, the tomatoes, the onions, the garlic, all those products she's going to close with and sold at 10 p.m. is what we call the closing stock or stock at the end. Then I want us to look at how now you can find the gross profit. Let's say, for example, here, example 1, we want to look at the illustrations. We want to look at the illustrations. If you can have sales of 100,000 and then we have opening stock of 10,000 and then we can have closing stock of, let's say, 5,000 and then purchases we can have like let's say 50,000. Then the question is here, the question is you are required to, 1, calculate gross profit. That's part 1 of the question. Part 2, prepare trading account. Prepare trading account. So if we look at, if we can work out on calculation of gross profit here, calculation of gross profit here, we are moving together here. Calculation of gross profit here. So we are going to see here. This is sales. 100,000. We have said the formula for getting the GP, the gross profit, is sales minus cost of sales, and then cost of sales is calculated by getting the opening stock plus the purchases minus closing stock. So in this case, cost of sales is equals to, so opening stock, it's 10,000 plus purchases here, we have got 50,000 minus closing stock, which is 5,000. So the answer here, 10,000 add 50,000, 10,000 add 50,000 here, then you subtract 5,000, this is coming to 55,000. 10,000 minus plus 5,000, that's 60,000, minus 5,000, that's coming to 55,000. So that is the cost of sale. So GP in this case will be sales, it's 100,000 right here. Sales is 100,000 minus the cost of sales, which is 55,000. So it will be 100,000 subtract 55,000. This is equals to, GP will be equal to 45,000. So that is the gross profit. So in this case, gross profit is calculated by, you get the sales, identify the sales, you identify the cost of sales. You first of all find the cost of sales by getting the opening stock, you add the purchases, you subtract closing stock, you get the gross profit. You get the cost of sales, and then you get the 100,000, which is sales, minus the cost of sales that you have just gotten there. You are going to get to arrive at an answer for that's 45,000, the gross profit. Now, up to there, can we now move to presentation of this information in a trading account? To every candidate who is watching us here, this question here, if you are required, you are being asked or requested by, or you are required by the examiner to prepare a trading account alone, that will earn you 5 marks. So that is and these are the questions that rarely miss in either paper 1 or paper 2. Mostly it's paper 1 because it's just a simple question. It's part of the paper 1, just a simple question. So here, if you are required to calculate, I believe we are preparing the candidates for exams, KCSE exams. So if you are required to prepare a trading account, you are rest assured of earning 5 marks from that question. So in this case, up to this point, you are now to present this information in the trading account. You are looking for the 5 marks of the 100 marks of paper 1. So let us see how we are going to bag this 5 marks from the 100 marks required on paper 1. Let's go. Preparation of a trading account. Let's call this one XYZ. Let's call it XYZ Traders. Remember, the arrangement of the title matters a lot. So in this case, in this calculation, on this question here, the examiner will be looking at the process, not the final answer. So starting from the arrangement of the title of that account, it matters a lot. So let us look at this, the arrangement, how you are going to arrange this. So XYZ Traders trading account for the year ending for the year ending 31/12/2023. So need to the debit side, you draw that line there. I hope we are together up to that point. The debit side and the credit side. Let me just tell you what requires you to know between the debit side and the credit side. Now on this side, the debit side, we are going to record all that are affecting the cost of the stock to be sold. You are injecting money in the stock to be sold. So this side, the debit side, is a side where we are going to record the information that is affecting all the cost of those products that have been sold. Remember, we are preparing this statement at the end of the trading period. We are looking at that greengrocer in the village down there. Identify them by name. You know them. Yes. I want us to look at the one you've mentioned, that name. Let us look at that greengrocer, that old mama who usually opens the greengrocer kiosk at maybe 10 a.m. up to 10 p.m. Now, she is now preparing a trading account at 10 p.m. before she goes to sleep. She wants to know, did the stock bring a good return in the time she was making doing the trading activities? So here, we want to look at, you start with the opening stock. So opening stock, our opening stock here is 10,000. You write it here, 10,000, because there are adjustments we wish to do here. I want you to follow me keenly. The student, the candidate who is preparing for the national exams towards the end of this year, in the next 5 months, I want you to follow me very keen here. I'm giving you a leakage on how to bag 5 marks here. This is the only leakage I can give you. The leakage is right now. You get just to follow the steps on how to bag. I've told you the examiner does not look at the final answer. He looks at the process. First, second, third, fourth, up to the final step. So let us go step by step. Here, opening stock, 10,000 here, right? Plus purchases. So purchases here is 50,000. Yes, 50,000. You have 60,000 there. That's, I'm showing you how to arrange this. Hope you are following keenly. So 60,000 is the total of opening plus purchases. Then down here, less closing stock. So closing stock here is 5,000. 5,000. So the total here comes to the difference here comes to 55,000. So this is 55, the cost of goods sold. So cost of goods sold or cost of sales, it is one and same thing. Cost of goods sold or cost of sales is one and same thing. 5,000. Up to there, I hope we are together. We are through with this side of getting the cost of the goods that have been sold, the goods that have already been sold here. I hope you are together. Then we come to this side, the credit side, sales. Sales, how much is sales here? Yes, it's 100,000. Sales, 100,000. We don't have any adjustments on the sales. it is just 100,000. We don't have any adjustment on the sales. It is just 100,000. So the total down here is 100,000. You double score. That's the grand total, meaning we don't have any adjustment down there. So total sales 100,000, and then you come here. This 100,000, subtract the cost of sales. 100,000 subtract cost of sales, which is 55,000. So the difference here, is 45,000. Remember, we are just transferring this information to the trading account. So the difference here is 45,000. The difference here, so we are going to write here gross profit carried down. Gross profit carried down 45,000 to make both sides balance. Gross profit, so this side sales did not have any adjustment here. It's coming to 100,000. Then if you get the difference between the total of this side, which is 100,000, the sales, against the total this side, which was the cost of sales, 55,000, the difference is 45,000. So therefore, if you add 55, we add 55 together here, 55,000 plus 45,000, that's 0, 0, 0, 0, 0 here, carry 1, so this is 10. So this is 100,000. You double score. Up to there, I hope we are together. Trading profit, it is called trading account, right? Thank you. So I hope the candidate who is watching right now, we have made the, we have prepared the calculation, we have prepared a trading account. Remember, the examiner had given you 2 questions on that statement. 1, calculate the GP. We have calculated the GP here, it's here. Second, you are required to prepare a trading account. So we have done it. So this is the arrangement of the title. Very important. It will earn you a mark. So right from the way you arrange your title here, to the way you show you are working here, to the way you arrive at a final answer. We don't mark the final answer. We mark step by step, step by step. So I hope wherever you are, if you had a problem or a challenge in preparation of a trading account, you are now okay with. So that is the trading, that's an illustration of a trading account. Next, we are now through with the trading account. I want us to move to the next one, which is calculation of net profit and preparation of a profit and loss account shortly, very fast. So calculation of a trading account, calculation of net profit. Now, what is a profit and loss account? After looking at a trading account, you have you realize, you agree with me that the end result of a trading, you come here, so we have GP brought down, that is 45,000, yes. So that is GP brought down. If it is carried down here, it crosses this side down, the totals here to be brought down. Now, the end result of a trading account is the profit and loss account. Let us look at the end result of a trading account is the gross profit. Let us now go direct to the profit and loss account. I'm teaching the candidates together with that green grocer in the villages down there. You are watching this. Whenever you'll be carrying out your trading activities, I'm now showing you how to know when you make a profit and how you are going to know whether you made a profit or you made a loss. So the end result of this trading account is the gross profit, calculation of gross profit. Then we look at the net calculation of the net profit here. That is profit and loss account. Yes. Profit and loss account. So a profit and loss account, the end result here is the net profit. Now, assuming, I want us to continue this way, assuming we have the gross profit down there. We have got the gross profit down there. So we are looking at net profit. So net profit, the word net means gross less deductions. Gross less. So in this case, we have got the gross profit minus the expenses, the running costs of this particular business. These expenses, we are talking about things like lighting. We are talking about things like advertisement. We are talking about things like advertisement. We are talking about things like insurance and so on. So net profit is equals to gross profit plus revenues minus total expenses. Are we together up to there? That is gross profit plus revenues minus total expenses. That one, I think we can do an illustration here. If we have lighting of 600, that is electricity. We have advertisement of 1,000. We have insurance of 2,000. And then if we can talk of revenues. Revenues, if we can talk of discount received. Discount received, let's say 100 shillings. We talk of rent received, that is 5,000. And then we can talk of something like another one. We have got commissions received. Commissions received, we talk of 200. So in this case, net profit, as we have said, gross profit plus revenues minus total expenses. Now, in this case, the gross profit brought down is here. So we have gross profit. This is 45,000. That is 45,000 plus revenues. Total revenues, we have got discount received 100 plus 5,000 rent received plus 200. That is commissions received. Then this one, you subtract total expenses, which is 600 plus 1,000 plus 2,000. So in this case, if you get this one, 100 plus 5,000 plus this 5,300 minus 5,300. So the total here, 600 plus 1,000 plus 2,000, that is 3,600 minus, that is, we are going to get here 45,000 plus 5,000, that is 50,300. 50,300 minus this one. This is 600 plus 1,000, that is 1,600, 1,800. That is how we get it. It is not one, this is 2,000, sorry. This one is 2,000 here, not 200. So we have got 600 plus 1,000 plus 2,000, that is 3,600. So if we try to carry out this, 5,000 50,300 minus 3,600. This one 0, 0. This is 13 minus 6. This is 7. This is 10 minus, that's 9 minus 3, 6. So this is 46,700. This is the net profit. So if we can get this one be presented on the trading profit and loss account here right now. This is how it's going to be. X, Y, Z, traders, profit and loss account as at 31/12/2023. This is the credit side, the debit side. So here we have got total expenses. Yeah. Then here we have got GP brought down. So GP brought down was 45,000. Add expenses. Add revenues. You add the total revenues here. So the total revenues. Total revenues here, we have commission. We have rent received. We have discount received. So commissions received here. Commissions received, we have got 200. Rent received is 5,000. Then discount received is 100. So this one is coming to 5,300. 5,300. So this should be 50,300. Then this side, total expenses, we have got lighting, 600. We have got advertisement, that is 1,000. Insurance, 2,000. Insurance is 2,000. Then total here is 3,600. And then net profit carried down here is 46,700. If you add, it should come to 50,300 on the same line. So that is, it crosses this side to be net profit brought down 50,300. So that is the end result of a profit and loss account. So we have looked at the trading account, calculation of the gross profit, calculation of the net profit, calculation of preparation of these two statements. It carries 5 marks on in a national exam. So at the end of this, I believe I have prepared you adequately to go and go through this particular topic again. Maybe we are going to be receiving queries in our next topic, which we are going to look at how do you prepare a trading profit and loss account combined together. It has been a pleasure to meet you, to give you or to take you through this particular topic and the subtopic, that is trading, that is financial statements, trading profit and loss account, and making those calculations. So next time you are going to look at the combination of the two. Until we meet next time, I just wish to let you know that the future belongs to those who believe in the beauty of their dreams. The candidate. Up to you.